CNBC-TV18 and CNBC Awaaz present the REIT Connect in partnership with IRA.
Hello and welcome to the REIT Connect in partnership with IRA, the Indian REITs Association. Now, we are here to really explain how real estate investment trusts, commonly known as REITs, can play a very vital role in your diversified portfolio. And to delve deeper into how you can invest in REITs, I have with me two sector experts to discuss just that. Let me welcome on the show Preeti Chheda, who's the CFO of Mindspace REIT, and Nitin Idnani, who's the MD of Real Estate Advisory at JM Financial. Welcome to CNBC TV18.
Thank you.
Now, my first question, Preeti, you're the CFO of a listed REIT company. Now, if you have to convince me to invest in a REIT, how would you convince me? What is it that I have in REITs for my diversified portfolio to get better returns than other products?
Absolutely. So I think this is a unique product which the Indian capital markets have got for three key reasons. This is one product which gives you a blend of both regular income as well as growth. Generally, you have products which are income products or you have growth products.
Yes.
This is one product which very well blends both income and growth. And just to explain this a little, if you look at the underlying contract of all the assets which are sitting in a REIT, it could be shopping center, it could be offices, or any other asset class which is generating income. So you have long-term contracts and they generate rentals on a regular basis. So that's where, and under the REIT regulations, 90% of the cash flows need to be distributed. So the REIT cannot retain with itself more than 10% of the cash flow. So all the 90% cash flow is coming to the unit holders. So that is, in a way, giving regular returns. And also the growth is coming from the fact that when you look at the contracts, they have inbuilt escalations, which could be anywhere between 4 or 5% annual. And together with that, generally we've seen in the last, 15-year history that your rentals also grow at a pace faster than these escalations because they're catching up on inflation. So to that extent, we've seen, if you tell me over the last 15 years, we've seen a good 7% growth in the rentals.
Yes.
So when you couple the income together with growth, you're talking about, say, a 6-7% yield, and you're talking about a 7% growth. So in all, you're talking about 13-14% of total unit holder return. So that's one thing which really differentiates this product versus the others.
So basically, you're saying that I would get a cash disbursement
Yes.
as part of dividend if the
Correct.
company generates cash.
Correct.
And on the other hand, like a stock, my equity
Please.
value can see an upside on the
Absolutely.
exchanges.
Absolutely.
So that's a combination that we
Yes.
are talking about.
Absolutely.
Now, Nitin, how to maximize the benefit from this product, which is fairly new in India, and people are just about understanding how to best capitalize on their investments?
First of all, thank you, Nisha, for having me on the show. To my mind, firstly, REITs, they are not a one-year investment product. To maximize the value out of a REIT, you need to, much like how you would invest in the underlying asset, real estate, not from a one-year perspective, but from a longer-term perspective. Similarly, even REITs will give you the maximum return for your money over a slightly longer period of time, not just a year, because you need the underlying asset to perform for you. Some of the stuff that Preeti referred to, the increase in rental income that comes from the contracted escalations in the lease agreements,
Yes.
or be it the mark-to-market potential of those portfolios, because rentals today are much higher than the rentals that were locked in,
Yes.
say, 9 years back. So when those agreements come up for renewal, they get rebased. There is a certain amount of vacancy in these portfolios which gets taken up. There are new developments. All of this goes to add to the growth in the income, which plays out over a certain period of time.
Yes.
Which is why when you think REITs, you typically tend to think of them from a slightly longer term perspective.
Yes.
And then it gives you all of those advantages that Preeti spoke about: a regular dividend income, capital appreciation over the longer term.
It's like, owning a piece of an office building or else a shopping mall. These are the only two types of REIT
Yeah.
today
far.
so far available. While globally we have even rental schemes on residential as REITs as well. But we don't have that in India. But it's like owning a piece of an office space. And then, as the rental increases or decreases, your investment growth upside potential is seen as per the rental, trajectory. Now, Preeti, when we talk about this as a long-term play, I want to understand, but its mode of investment is actually like equities,
Absolutely.
which in India has become so popular. Everybody is doing it. So, how does one invest in this, and how do you track the performance as well as the exits?
Right. So, Nisha, this behaves exactly like a share, a stock which you're buying. You buy on the market. All of us have demat accounts. We have access to the portals. You just, at the click of a button, the way you buy a stock, that's precisely the way you buy REIT units. So it's as simple as that, no complication whatsoever. So if I were to sum up, it has all attributes of a stock, but the nature is different, simply because it's income plus growth product.
Right. But then, Nitin, you've been in the public market for so long and you've advised so many companies, taken a lot of IPOs, deals, all that. But when we look at an equity product, it's as good as an equity in a way, because a lot of stocks also give dividends. It's just that it's not well defined. It's basis the kind of performance that they have had. What do you think about this particular argument of equity classification?
So REITs are equity. I mean, if you think about it, at the core, there is no obligation to distribute. If the performance doesn't come through,
Yes.
case in point, COVID, and let's say you're not earning rentals, which was not the case for the REITs,
Yes.
but for whatever reason, if the rentals are not coming through, then there is no obligation to repay. So in that case, it's not debt; it's actually equity.
Yes.
But there is a distinction that I would like to bring between REITs and real estate stocks. To my mind, REITs do away with all the pitfalls or concerns that investors have had with real estate stocks. Execution risk. 80% of a REITs portfolio is completed. So
Yes.
there is minimal execution risk. Leverage risk. Leverage is capped at 49%. So you're never overextending yourself. If you think about it, capital allocation. Because a REIT is mandatorily supposed to pay out all its net distributable cash flows,
Yes.
you need to go back to the unit holders for any new capital allocation that you need to do.
Right.
These are, and many more such checks and balances make REITs very, very different from underlying real estate stocks, give a lot more protection to minority unit holders,
Yes.
and also bring a very high level of corporate governance and transparency and disclosures.
Right. I want to pick on that corporate governance aspect. Now, Preeti, we know that several industries have toiled for several years to get the right kind of transparency.
Right.
Real estate is one such sector. But how is REIT differentiated in the corporate governance standards? And also, how do the unit holders, the investors, the trusts, and the managers play a critical role?
Absolutely. So I think that's the beauty of this product. The governance around this product, if I were to say, it's even tighter than a normal listed company, because there are certain things which are mandated under the REIT regulations which you don't really see in listed companies. And I'll give you a couple of examples. So we are required to give valuations half yearly,
Yes.
which a normal real estate company is not required to. So this helps every unit holder to assess what is the true worth of their unit versus where it's trading. So it gives a sense of comparison versus where it's trading. There are very tight regulations in and around related party transactions. There are again valuations required, unit holder approvals. So overall, I would say the governance structure is been pretty solid, and in fact, it mirrors international jurisdiction. That's a beauty, because a lot of regulations, the way our regulatory framework is actually mirrors Singapore. So there are a lot of international practices which are already embedded in the regulation.
Right. So you spoke about certain of those tenets, but versus the global scheme of REIT and that compared to India, how is the framework different? And What are we heading towards? And also, is equity classification very critical?
Right. So I think from a regulatory perspective, to start with, if you look at the base, it's very similar to what is internationally available because to a large extent, our regulations are in line with any global REIT regulations. And of course, it's an evolving regulation. We are just 5-year-old versus US, which is 60-year-old regulation. So that has seen a journey, and we have started to do that. But some of the things like which are important for this product to grow, and since we're talking about equity classification,
Yes.
I think one reason why we need equity classification is to create liquidity in the instrument. We need things like listing on the indices. Like to give an example, lot of REITs are already on lot many equity indices globally,
Yes.
but we are not on any indices in the home country.
So that impacts the traction
Yeah, and the liquidity in the stock.
in the stock. Since the first IPO of the first REIT to now, what has been the trajectory in terms of the real retail participants, showing interest to this product?
So we have come some way.
Hmm.
I think the number is close to about 200,000 retail participants.
Yes.
But we've only scratched the surface.
Hmm.
I mean, if you think about it, we add 3 million demat accounts a month.
Hmm.
So there is a huge scope for increased participation in REITs as well.
Hmm.
But like Preeti said, it's only been 5 years. This is a young product
Yes.
from a capital markets perspective. And even globally, if you see,
Yes.
it's taken time for retail participation to come through, for there to be more liquidity, more depth in this product.
Hmm.
We as Indians love real estate,
Hmm.
and this comes very naturally to us. I
Hmm.
think the only thing that's to happen is far more communication, dissemination of information and knowledge about the product.
Hmm.
And I'm pretty certain we'll see a lot more participation in years
Yes.
to come.
So, this also mirrors the journey of mutual funds, which have been there
Right.
for a very long time. But their association, AMFI, made a lot of efforts to educate the participants, people of the country. And now it's become such a popular product. So it's about the journey of this space as well, and also the real estate prices, because it's also a very big ticket investment. A property investment for any Indian is a dream. Whether it's commercial or residential more. But to have that kind of big ticket, the amount of money to buy a property is the constraint. Here you're piecing it into small units and you can buy into the property and see the escalation. So that's the beauty of this product. But Preeti, there are two types of growth. One is obviously the rental growth, which on a yearly basis, how offices are doing, how companies are doing, and the real estate prices. But on the other hand, the growth potential of a REIT as a company which is listed. How do you define that? Are there enough? Are all of them through acquisition? And are there enough availabilities?
Right. So if I were to look at the office landscape in India, we have almost, I would say, 800 million square feet of office inventory in India, out of which, even if I were to take the real grade A inventory, that'll be somewhere around 450, north of 450 million square feet. Today, we have just 110 million square feet in the REIT. So if you ask me the growth potential, it's almost 4x from where we stand today.
Yes.
Now, growth, of course, comes with the rental escalations, mark to markets, and so on and so forth. But I think one of the key elements will also be acquisitions, growth through acquisitions. And if you look at the very developed markets like US, Japan, Australia, you see the number of assets which those REITs buy every year and the kind of churn that happens.
Yes.
It's a very active market where acquisitions happen literally almost every now and then.
Yes.
And that's how they, I would say, in a way, turn the portfolio and keep growing it. You buy assets, you upgrade them, you create value out of those assets. Then some of them sell off a couple of assets, make money for and that's the way wealth creation happens. And acquisitions are very, very common. Of course, we are still to see that scale of acquisitions,
Yes.
but I think the opportunities are enough and more for the REITs to grow.
Okay, so as a deal maker, but the real estate development market is also very unorganized. There are many standalone developers as well. And are there enough such assets to be acquired and to be rolled out into a REIT?
No, absolutely. I mean, uh, just talking office for a minute, and
Yes.
like Preeti said, you've got 4x the number of assets still out there,
Mm.
and this is still grade A portfolio. There's
Mm.
a huge chunk of grade B portfolio which, if refurbished, could also make the cut.
Mm.
Then you have other sectors like retail malls, you've got warehouses, you've got data centers.
Mm.
Basically, any asset which has got a steady annuity like underlying cash flow can be REITed.
Yes.
So in terms of the potential for this product to absorb, we've not even scratched the surface.
That's a very good point you made, that warehouses and data centers, these are the upcoming, emerging sectors where a potential of REIT is quite possible in the near term. But Preeti, how do you see the growth potential in your area of work from your company? How do you see the growth potential and the kind of attraction that you'll have for the investors?
Yeah, so as I said, for any of the REITs, not just my REIT in specific, I think one of the key things will be one, to make sure that the existing portfolios, you keep creating value add to the existing portfolio and see how do you grow the rentals.
Yes.
That's organically. And I
Mm.
think all of us have certain amount of development which is sitting in the portfolio, which gives you that extra IRR, which you otherwise would not get in a typical yielding portfolio. So that, and the REIT regulations also allow us to have 20% on the construction side. Besides that, of course, as I said, acquisition is a
Yes.
large opportunity for any of our REITs to grow. So I think all of us are pretty cognizant of the fact that it is important to create more liquidity in the instrument, and growth is also one of the ways to bring about that liquidity in the product.
All right. So, Preeti as well as Nitin, thanks so much for a freewheeling discussion on this very interesting space of REITs. And it is at a very nascent stage in the country and huge potential to grow, with several different pockets of real estate to be added to the REIT community in future. Thank you so much, Preeti
Thank
and
you.
Nitin,
Thank you,
for
Nisha. It's
joining
been a
us.
pleasure.
Thank you so much.
you.
And thanks to all the viewers for joining us right here. And it's a wrap on the REIT Connect. Thank you.
CNBC TV18 and CNBC Awaaz present the REIT Connect in partnership with IRA.